A lot of different product announcements. So you guys are really getting into financial services in a new way, in a totally different way. So you've got wealth management, robo-advisor, private banking, and this AI feature. I want to get to all of that. But in terms of getting into this arena, what gives you confidence that you can differentiate from what's already out there?
Yeah, I mean, we try not to launch a product unless we feel like there's at least one major way in which we can differentiate on pricing and also on user experience.
Could Robinhood be one of the best opportunities coming out of this recent market crash? Well, potentially. In this video, we're going to be getting into why I think this. We're going to be looking at some of the news surrounding Robinhood and their intrinsic valuations. We're also going to be looking at their financials to see where this company is heading financially. Is it stable? Is it worth your investment? So, to kickstart this off here, we have an article from The Motley Fool. This unstoppable stock has 150% upside according to a select Wall Street firm, but I'm not buying it. In this article, they are talking about Robinhood. To quickly summarize this article, is basically said that a Wall Street firm has basically said that there's a 150% upside potential within this stock. However, there is a massive threat to this stock, which is, of course, falling interest rates that are posing a threat. Net interest revenue became a key part of Robinhood's business after the Federal Reserve aggressively hiked interest rates during 2022 and 2023. And now they account for almost 30% of the company's total revenue. In 2021, prior to the hikes, that figure was just 14%. During the fourth quarter of 2024, Robinhood earned interest on its own cash reserves of $4.3 billion and on the $4.7 billion cash it was holding for its clients. This company also had a record of $7.9 billion in outstanding margin loans at the end of this period, which was up a whopping 126% on the year. All told, net interest revenue came in at $296 million in Q4. Which does sound great, but this part of Robinhood's business could face significant decline, as the Fed has cut interest rates 3 times since September last year, as inflation is now under control, which could potentially be on the reversal in my opinion, especially with these US tariffs, and there are even more cuts forecast for this year. Lower rates will erode Robinhood's net interest revenue over time, and the decline could offset some of the growth in the company's transaction revenue. So if Robinhood can't maintain its triple-digit percentage growth in its transaction revenue over the next few quarters, I think it's likely that this stock will decline until its price to sales ratio lines up with its historical average. So that just basically goes over what this article says, which I do agree with. I think there's a lot riding on broad economic and macroeconomic conditions for Robinhood, but with that being said, what do their financials actually look like? Well, here I have actually conducted a financial assessment on Robinhood. And to kickstart this off, we have a retention rate which is absolutely outstanding. As of recent quarters, they are pushing 90% retention, which is ridiculous. But if we go off of the last 5 quarters here, we can see a mean of only 34. But I say only 34, that is still absolutely ridiculous. And if we move on to a liquidity ratio here, we can see that this is also really good. For every dollar of debt they have at least $3.4 in the most recent quarter of cash to pay this back in, with the mean of this being set at 6.54. Again, really good, something that is incredibly strong. Now it goes a bit weird for Robinhood. We can see a free cash flow analysis for Robinhood, and this is where it does go weird, as they are actually a bit volatile here. But when we do go back to their liquidity, we can see that this shouldn't be too much of an issue because they do have a really good liquidity ratio. But despite this, they are very volatile, which is not ideally something that you would like to see. Looking at a 365-day exponential chart here, we can see that the trend line is projecting this to just continue to increase, which is very unlikely at this point, and volume is correlating really nicely, which is very bullish. It means that this current price is what's the word I'm looking for here, is backed up in a way. Looking at the normalized distribution for the year here, we can see that a probability of a positive day is 56%, a neutral day is 11%, and a negative day is 33%. Of course, this is to be taken with a pinch of salt, as market conditions are now very different. And looking on a 91-day chart here, we can see that price is actually definitely going down now, and the exponential trend line is expecting this to continue to go down, but it is actually putting a very slight bowl effect on this, indicating that we could potentially see this potentially rebound in the next couple of months, or maybe more so towards the tail end of the year. And we are, of course, seeing volume correlate relatively well. Looking at the quick figures here, we can see a PE of 0.25, a 52-week high of 66, and a low of 13. This being a difference of $52, and a current beta of 2.18, which indicates this stock is very volatile. They have a current earnings per share of 1.55 and a growth rate projected at 16.51, with a mean surprise rate coming in at 53% over the last 4 quarters. This gives us a growth rate plus mean surprise of 25%. Okay, so now looking at the intrinsic valuation for Robinhood, this is where things get relatively positive for them, as their outlook is looking really good. Of course, this is going off of growth rate and surprise rate and EPS and other things like AAA bond yield. This is Graham's formula. On the left here, we have the bullish one. We have an intrinsic value set at $83 for the next year's growth, with the current price set at $34 and a margin of safety of 25%. This gives you an acceptable buy price at $62, which is obviously well above where we currently are, indicating that this is a strong buy, and these dials here definitely project that for you. And on the right bearish side here, we have an intrinsic value set at $45 with a margin of safety of 25%. That sets us up for $34, which is actually currently just about where we are. So I'm putting that as a buy, even though it says sell, of course. Going in between these two here, we have the mean of $64 on the intrinsic value and an acceptable buy price at $48. So it definitely looks to be a stock that is intrinsically undervalued at the moment, but let's not just base our analysis on one formula. Let's have a look at some others. And to do this, let's have a look here at Peter Lynch's valuation, where we have a result of 1.13, which indicates that this stock is fairly valued currently. And this is a very bearish assessment, which essentially means that I would put this up to a undervalued. So again, affirming this stock looks positive right now, but when we move down to a discounted free cash flow analysis, we do yield different results. And here we can see the results are a negative, which is of course not bad, but when you look at which is bad, of course. When you look at the free cash flow for this stock, it is very volatile, as we went over in the financial part of this analysis. So, of course, these were going to yield very weird results. And so, therefore, I don't really want to include this, but I'm going to show you anyway. But that is enough about my opinion. Let's see what the analysts are putting in for Robinhood. And on a general consensus of 21 analysts here, we can see that they are putting this in at a buy, with 7 putting it at a strong buy, 7 at a buy, and 7 at a hold, indicating that this stock looks to be something in which is potentially going to have quite a strong future in the next coming months. Looking on a price target, we can see here that analysts are putting this in at a high of 105 and a low of 34, and this being a mean of 65, indicating that this stock could be a good buy. But of course, we are now seeing a massive decline on this stock recently, with it falling down due to macroeconomic conditions and just broad market conditions in general. And with insiders dumping their stock in Q1 of 2025, then it is clear to see that there might not be that much hope with the internals of Robinhood, but it all depends on how much of their stock they actually sold, of course. But with Robinhood set to announce their first quarter 2025 results on April 30th, put that in your calendars. I think it's 25 days away from where we currently are. It's the 5th as of recording this, so hopefully this is all still up to date as you are watching this video. But please do put that in your calendars if you are concerned with this stock, as it will be quite a significant earnings release for this company. So with that being said, I am going to put Robinhood in at a buy rating, despite the fact that discounted free cash flow analysis wasn't something in which we could really carry out, but they are looking undervalued intrinsically. So I am going to end this video here. If it has been useful, please do leave a like, subscribe. It would be greatly appreciated. I hope you have enjoyed again, and I'll see you for the next video.